17 of 21 series are aligned with expansion strong this morning. That is substantial mathematical agreement across the framework. The current macro regime is expansion strong, with a confirmation score of 17 out of 21. The engine is observing a macro regime defined by growth momentum accelerating at plus 0.12, while inflation momentum is decelerating at minus 0.01. In plain terms, the growth side of the model has firmed, while the price side has eased. The coherence score is 17 of 21, and the confirmation score is 17 out of 21, which places this morning's reading in a strong alignment band inside the framework. Compared with last week, confirmation has held at a similar level, while the growth composite improved over the past 2 sessions and the inflation composite stayed negative. That combination matters because markets often translate it into a debate over whether better activity can coexist with cooling prices. The historical record inside the model describes this kind of setup as one that has often featured stronger cyclical participation, steadier credit conditions, and softer behavior in defensive hedges. That is a record of past behavior, not a forecast. The first signal is the 10-year Treasury yield, now at 4.63%. The momentum label is red, defined here as the long rate holding above the framework's 4.45% threshold. In our framework's reading of comparable periods, this roughly coincided with firmer inflation momentum in 9 of 11 similar cases within the following sessions. An observation under our methodology, not a forecast. Why markets watch it is simple. Long rates shape discount rates, mortgage costs, and the price of duration-sensitive assets. The question is whether the bond market is signaling stubborn inflation or a heavier term premium. What would challenge this read is a sustained drop back below the threshold and a softer inflation composite. The second signal is non-farm payrolls, the broad count of jobs added outside farming. The momentum label is red, with the labor series still acting as the framework's unfavorable confirmation input. In our framework's reading of comparable periods, this roughly coincided with weaker regime confirmation in 7 of 9 comparable conditions within several weeks, an observation under our methodology, not a forecast. Why markets watch it is that payrolls tell participants whether the economy is still adding enough jobs to support spending. The question is whether labor softness remains contained or starts to feed into demand and earnings. What would challenge the read is a re-acceleration in hiring or a clear improvement in wage breadth. The third signal is credit and risk appetite, using the fear gauge and the volatility complex. The VIX is 15.27, VVIX is 88.72, MOVE is 70.88, and fear and greed stands at 59.6. The momentum label is green, defined here as volatility remaining in a normal band and sentiment staying above panic levels. In our framework's reading of comparable periods, this roughly coincided with orderly cross-asset behavior within a few weeks, an observation under our methodology, not a forecast. Why markets watch it is that calm risk conditions usually shape how far spreads and equities can travel without disorder. The question is whether that calm holds if macro data keeps sending mixed signals. What would challenge the read is a sharp deterioration in sentiment or a sustained jump in volatility. The fourth signal is energy and metals, where gold has moved sharply higher while crude oil has eased modestly. The momentum label is yellow, defined here as mixed commodity leadership rather than one-way stress. In our framework's reading of comparable periods, this roughly coincided with rotating leadership across sectors within several sessions, an observation under our methodology, not a forecast. Why markets watch it is that commodities often capture both growth expectations and inflation pressure at the same time. The question is whether the move reflects hedging demand or broader macro caution. What would challenge the read is a broad, durable move in the same direction across energy, industrial metals, and rates. If the 10-year Treasury yield crosses 4.45% and holds for 5 consecutive sessions, in our framework's reading, inflation momentum accelerated in 9 of 11 comparable conditions. A historical characterization, not a forecast. That trigger matters because it tightens the bond market test of the current regime. If the fear gauge drops below 15 and holds for 5 consecutive sessions, In our frameworks reading, confirmation deteriorated in 7 of 9 comparable conditions. A historical characterization, not a forecast. That trigger matters because it would shift the risk backdrop from orderly calm toward weaker internal agreement. The map is live. These conditions are being monitored daily across all 21 series. The Given engine is the automated rules-based engine inside Given Analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates we just covered. Second, it runs a fixed 4-layer mathematical framework: price structure, rate of change, risk regime, and market participation, across 407 liquid symbols every trading day. When all 4 layers agree on a symbol, the engine records it as an upside-aligned or downside-aligned condition under the framework, a reading of how the 4 layers line up, not a trade. These are time-stamped model readings, logged for members to study. The environment view and the condition log sit side by side inside the engine. They are separate outputs. The regime does not pick the symbols, the 4 layers do. Members use the Given engine to study how the framework has recorded conditions across prior environments, as historical behavior, not as trade selection. The Given engine runs the framework. You study the outputs and environment. You decide what to do next. The Given engine monitors 407 symbols across 4 layers, independently of regime. Every trading day, this is free. Watch real symbols go active in live markets at the price it's happening. See which sectors are leading and learn to read what's driving it yourself. That live view is the observation desk. The same 21 series and 407 symbols founding members study each morning, the environment underneath every move. If you want to watch it alongside us, the live view is at givenanalytics.com. Free to try, no credit card. For the first 500 founding members, watch it before you risk $1. You decide.